Okay, we're live. 2026,
Yay!
January 8th,
Keys to home.
2026.
We're a year in, regardless of these two guys thinking we're 3, 5, 10.
What are you trying to say?
Happy New Year, everyone.
Happy
I
New
hope,
Year.
I hope your New Year is off to a great start. I
Yeah.
really do.
Well, New Year's
You want to see
Eve, but
mine? Want to see my new year off to a great start? How about that?
Oh, that doesn't look good.
yeah.
No, it's
What
not.
happened? Well,
Yeah, what happened with that, Lance?
My vision problems with this eye have exasperated, and uh, I fell up the stairs at the house here, braced with this, broken here and here. And it hurt
You know,
like
I've
a
never
sock.
broken a bone.
Well,
wow.
lucky you.
When did that
Yeah.
happen, Lance?
About a month and a half ago, I just kept grinning and bearing it, dealing with the pain. And finally on Christmas, the night before Christmas Eve, I couldn't take it anymore and found some place, pediatric surgery place finally saw me or was able to see me on Christmas Eve in the morning. It sucks. It's a really big, cumbersome cast. It's really heavy, and now I got a bunch of pain up here. But it's like, hey, it's gonna be a great year.
Yeah.
I just
Uh,
Tylenol.
yeah. Well,
It went.
hopefully all of that gets resolved and health and 2026 becomes a year of health for you.
Yeah,
Well,
likewise for me.
As they say, from your lips to God's ears, right?
yeah.
Mark, what's been going on with you?
The year's off to a flying start, and holidays were really good. Just relaxing, like pretty much like most people, adjusting to and recharging. And I have for me, December is not a time that I relax a whole lot, up until about the first part of December. I work pretty steadily, in getting my stuff ready for taxes and stuff like that. I've already scheduled my appointment with taxes, and things are. I'm in a holding pattern. So I take the last 2 weeks of December when things are slow and we have breaks and stuff like that to take everything out from 2025, gets filed, gets put into a box. 2026 gets put in place, and everything that I'm doing for taxes is ready and ready to go.
I do that the first 2 weeks of the year because December is a little busy for me. Real estate can be very busy. People trying to get to new homes before new school terms start or doing transactions that implicate with taxes before that. So traditionally I do it the first of the year. I was down in Houston. Did you know that?
I didn't know that.
Took we left on Saturday, came back on Tuesday to see Tim's kids. Had never been. Super foggy, ocean fog. Burns off by 9, and then straight back. And then we had I had 16 overnight guests and 20 some for Christmas dinner, without an oven because my oven died. Wouldn't hold temp correctly. It turns on, but it won't hold temp. So I got my new one delivered today, but I haven't got it hooked up because I'm switching to gas. I wanted to update some things from last year. Do you guys remember I told you I don't lose listings very often, and I lost one because I told the seller that it was $525 to $550 was probably the accurate pricing. And another realtor they knew said, "Oh no, it's $700 all day long, right?" And I had given lots of comps on why. And I said I was watching it, and it kept doing price drops. It had gone under contract, out of contract. It was a fantastic home. I loved this house. It was a mid-century modern. It had not been updated. The kitchen had been updated, but it had been super sympathetically updated. But there was some deferred maintenance, and they didn't really want to do a bunch to it. So based on that, and based on condition, and based on what else was available, I arrived at that $525 to $550, depending on sales timeline, right? So it's frustrating to lose transactions on that. but it's also, there's an ethical situation, and I'm not going to go into a whole bunch of stuff with National Association of Realtors because I have a whole lot of thoughts about a whole lot of things. But there's real estate agents and there's realtors, and the difference is that realtors are members of the National Association of Realtors, and we're held to an ethics, like we have to do ethics trainings with them every certain time frame. I think they just changed it to 3 years. So one of the things that we are held to doing in Article 12 is honest pricing, accurate opinion of value. And the reason, I'm going to just read this. Providing a trustworthy valuation is crucial for protecting the client's interest and maintaining the public's trust in the real estate profession. Valuations that are not credible or are artificially high can give a false sense of security to mortgage lenders and may harm communities in distorting market value, et cetera, et cetera. Now, it's not sold yet, but you're still pricing it. Then it sits on the market. And, Lance, that's a lot of what was going on in the crash. And this has been a code of ethics for a long time because, of course, you're going to go with the person who says, oh, I can get this amount of money for your house. Does that mean I'm never wrong? No. There have been 2 occasions that I can think of, and it didn't go high over what I told them to go, but it went higher, and it was in the tail end of the COVID situation, right? And the very next house after one of them did not go as high because the market was shifting back to norm. Okay. But this house ended up selling for $500,000 9 months after it was on the market. I absolutely think had we put it up at between 525 and 550, we would have had a sale in that price range. I don't think it would have gone down to 500. So in hoping to get 700, they lost 5,000.
What did it sell for?
500.
Wow.
9 months later.
9 months later.
Mm-hmm. And, this is a person that I've sold a small lot for before. That's an acquaintance of a mutual friend. The person lives out of state. And it was their mother's home and they had grown up in it and all that. But I found out from the friend multiple times that they were like kicking themselves for not going with me. All right, Lance, what's going on in your world this year? Where do you expect mortgage to go?
It's quite interesting. I mean, there's a lot of business going on. One of my good friends closed $14 million last month. So there's a lot of, that was all purchases here in Middle Tennessee. Not mentioning names, but I've worked with him. Jeffrey knows who it is. I worked with this guy for a long time. He hustles. He's got a lot of relationships. So for anyone to say there's not business happening, it's not true. A lot of the big ego people that Jennifer's talking about have very far reaches. They're driven. I could learn a thing or two from them. I'm also a little older and I don't push as hard as I used to. How about that? Mark, do you have any? I mean, all 3 of us probably can relate a little bit to it. Even out of necessity, we have to push, but sometimes physically it's not there, but I'm going to do it. So I'm Jennifer, tomorrow or next week, I'll close 1.6 million on 3 loans, the 2 refis and a home equity line. So I'm excited to tell you, I haven't even told you this yet. I can do very aggressive home equity lines right now. I have never been able to do that in my 26 years. I've always had to pass that off to somebody. And then when, Mark, maybe you've dealt with this, Jennifer, you have too. I'm not a control freak, but when you hand it off to someone else, you're trusting that they're going to do it. And in big banking, that hasn't always happened.
Not an incentive to do the way that Lance does it.
You nailed it. We've heard the term banking hours. They're a real thing. And I know that none of the people in these 3 little boxes on the screen work by bankers hours. We're available. And those top producers and the ego person I was talking to, they work 24/7 too. So I'm excited about that. Listen to this, Jennifer. In this particular case, this is it's actually a realtor. The realtor called me. They need some access. It's been a very tough year I have 2 realtors that have called me recently. 3 realtors that have called me recently. It's been a bad year. They're like, I know it's going to get better. I need a little bit of relief. What can I do? this particular realtor had called a big box company that you see on TV every day,
Mhm.
spaceship kind of company.
Yeah.
And they had offered this person a above 10% uh, rate and access to their money, but they didn't ask them for any income documentation. They didn't ask them for, they were just like, hey, let's get the appraisal scheduled. And that's kind of a trick in the business is you get the appraisal schedules. Now the borrower's got a little skin in the game, and it's like, don't do anything else, because if you do any, talk to anyone else, it's going to blow this all up. So the person just happened to call me and said, will you take a look at this good, it's not called a good faith estimate, but the LE, and tell me what you think. I was like, gosh, that's a really high interest rate. What did you provide with them? Nothing. And and it's actually the borrower's husband. And to make a long story short, what's really unique about this is the borrower is not on the house, is not on the main note, and they were giving this person a home equity line. I'm like, how is that possible? I've never seen that in 26 years. Well, it is possible now. There are companies that are allowing the first mortgagee to be one person, and the home equity line or HELOAN to be somebody else.
Do they
And
both, is this in the state of Tennessee?
yeah,
Do both of them have to sign all documents?
yeah, absolutely, Jennifer,
Okay. All
because
right. All right.
it's a primary home.
Because
But
otherwise I was going to be like, hold on.
yeah, there's actually, so I'm able to do the transaction. My rate was almost 3% better. Um, and I'm excited. I've just never been able to offer that to someone. So I've seen, and probably Jennifer, you have too, some other people in the market have talked about that. Other loan officers like, hey, call me, I can do a HELOC.
Mm-hmm.
I haven't been able to do that until now. So I'm very excited about that.
Yeah.
Mark, that may reopen some conversations we've had, because I this is a flaw of mine. Maybe you should cut this out, Jennifer, too, and edit this.
Okay.
But I don't, Mark, I kind of clamp up when I don't have a product. There's nothing, I know that it's more ethical and more of a man and more of a person to say, I can't help you. For my persona, though, that's one of the hardest things I can ever utter is that I can't. For example, my friend at the bottom right here, she has a car that she needs help with. She wants to sell it. I can fix it. She can take it someplace. And I can't say no to my friend for two reasons. Number one, she's my friend. But number two, because I'm a nerd, I'm a mechanic nerd. So it's going to get fixed this week. But it just has always bothered me in mortgage when I can't do something, I kind of clamp up. For the first time in my life as a true broker, I really can do everything.
I don't
Now,
think we necessarily need to cut this out, Lance, because when I told that other person, I can't help you, I can't do anything different than your current situation is doing, it's the truth. What we don't like about it is we are used to helping people. We are used to being able to get everything done and can't. And sometimes your hands are just tied. Sometimes you just can't do it. Sometimes it's like we say all the time on this show, it's not no, it's not right now. But sometimes it's you've gotten yourself in a situation, the client or the customer, that I can't do. I can't get you out of it. It's not my, like if you filed a Chapter 7 a year ago.
yeah, good point. So I got the HELOC. We'll leave it in then. So
Yeah.
that's a HELOC. Then I have another realtor, traditional big producer in the market, been in the business about 20 years, just in a slump. And that person called me, and I have a solution for this person. When they're watching this, they're going to think that everyone knows who it is. So it's impossible.
No.
This is owns a multi-million-dollar home, has the dreaded 3% mortgage that I got this person. Okay.
Yeah.
The house is tripled in value from what they paid for it. Has had one loan. It hasn't had many closings in the last year. Again, this is a name brand person.
Yeah.
Okay. Is not wanting people to know that, obviously. It took a lot to call me. Get that. I'm confident. I can do a loan for this person. It's called a no ratio loan.
Mm-hmm.
Mark, you bristling over there?
Yeah.
No ratio loan. What do you think that means?
Debt to income ratio.
Yeah, nothing matters.
Right.
Nothing but the property. So I gave you some of the inputs. So basically you're looking at like a 25% LTV. They do have to have, there is a credit floor for this product, but like as in a score. But other than that, that is it. As long as there's enough equity and they meet that credit floor. Now the interest rate is palpable. 8.5, 8.75. Now I'm not saying a plus or minus. My job, Mark, is to put this in front of that person.
Right. My job
They're
is
not interested in it at this point because that 3% has them grounded artificially, in my opinion. And they may come back. It was interesting, the conversation as it unfolded. This was an hour conversation on the telephone, and I rolled it out. It was very, and I'm not pushing it. I am not. I said, I have this available. And by the end of the call, this person was like, well, I don't really like that, but it might be my only opportunity. And the opportunity in this case would be to withdraw, maybe, I'm making this number up, $100,000, because they have no income. They can sell this house. There's a little bit more about the house.
There's always, I mean, here's the thing, Lance, you cannot gatekeep what you know. You
Right.
cannot make a decision for or against. You can lay out the aspects of something as you see them within certain parameters. It'd be like the same thing as me going, I'm going to just use my daughter, Hannah. Hannah, you can't live in this house because even though you love homes that are historic, this is from the 1870s and it's falling apart and little old you can't do it. I can't make that decision for her. I can't say, oh, you're going to be having children that are going to be going to school within the time period that you live in this house for the next 10 years. And I don't like these schools, so I'm not going to show you this house. You can't gatekeep that information, but you can give them the knowledge and the information. And that's honestly why we have the three of us. You have this product in certain extenuating circumstances. Yes, you're rolling the dice, but everything we do from getting in a car in the morning to going to bed at night is a roll of the dice. We try to mitigate our losses. We have Mark on here so that hopefully people don't have to get into certain circumstances. But, we've said for a long time, one of the things that as a business owner you should have is a HELOC that you don't touch. So that if times are bad, you can have income. And the other thing too, and Mark, we were talking about this with you earlier, the number of people I have heard this year say that their kind of word for the year is diversification. I've added senior move management and organizing to my real estate. Lance, you're still within the mortgage and the lending, but you're now doing HELOCs. You're now doing these kind of products. You have the DSCRs. You have the HECMs. Mark, I think that you have diversified in last year. You diversified, if I can say it, from simply financial coaching into also career coaching. Correct. So these, and if Lance's person that he's talking to wanted some more input, yes, you have your opinions on it, but you could give them additional input on it. And the people watching this podcast have the benefit of all three of our perspectives on things. So you're not in a wind tunnel bubble, because you don't want to be in a wind tunnel bubble on any major decision you're making.
So there's a lot, I've been patiently waiting to comment, and I got to dial this back for a second. My job is to simply find what options are available to the obstacles that you're facing. It's not Lance's job to make the decision. It's not your job to make the decision. It's not my job to make the decision on whether we buy a house, whether we attack debt, whether we decide. It's all of our professions, if you want to really look at things, boils down to, here are your options. Here are the things that you should consider. And to end that conversation and end that transaction with a call to action to say, which option are you going to choose? I don't own a person's successes or failures.
Mm-hmm.
I don't own whether or not I don't own whether or not they're going to make the decision to follow the guidance that is provided or not. I don't own that. And at the end of the day, you can simply put this in front of people and say, here are the options. I want to dial back into this conversation because there was comments made about when it's not my job. It's not my job to, or if I've reached a certain point where there's nothing else I can do. That is exactly the point at which if you feel that you have been cornered and there is no other option, I'm going to raise my hand.
Mm-hmm.
You still haven't thought about everything.
Right.
What
it feels like there are no options.
Yeah. If you feel that there is no other option, that is exactly the point that you bring in all three of us or more
a pair or whatever. Yeah.
A coach, myself. I did some research on coaching. I don't know if people understand this or not, but the industry of coaching is a $23 billion coaching overall globally. Did you guys realize that $23 billion industry that encompasses all kinds of coaching, life coaching, career coaching, financial coaching? Coaching is designed so that if you're cornered and you don't know where to go, you go out and you say, maybe someone else in this industry or that has this experience that with this situation can help me look at it just in a separate way.
Yeah.
I just had a client conversation. I just had a client session yesterday where they were stuck in very similar situation. We looked at it, we brought new ideas, and we shortened their entire journey by about 1.5 years.
Yeah.
Because they never thought to look at it in a different way. And I know Lance has got his hands up here.
I have to say this, and this is to your benefit, and I want you to hold your thought. I have to interject. This may be a life-changing next minute statement for you. About a month and a half ago, Jennifer was invited to we didn't know what it was. It was invited to this thing in Nashville. And she asked me to go with her. And we went to this presentation, and it was ironically, before the presentation started, Jennifer and I were talking to some people, and we had all these 3 degrees and 2 degrees of separation. It was crazy. It wasn't 6. It was like we knew a lot of the same people. The presentation was about in 2026 and beyond, your business is about your public branding.
Yep.
And what you just said, I've never heard anyone say, when you're in a corner and you don't think you've got an option, you do.
Yep.
I wish you had been there with us, and you can come to Nashville and go to this. They actually do it live. That could be the new Mark Crater. What you said, you did the research, the corner, what a cool branding.
Oh,
Just want to throw that out because
that's a great idea.
Become a super coach in a whole, just that idea.
Man, it reminds me of boxing. When you feel like you're up against the ropes, you've got somebody here going, hey, I'm seeing from the outside what's going on. You can't, and I know about this much about boxing. You keep coming in with the jab, but why don't you try an uppercut? Because there's a way to get in there.
Right.
Did I do that right? Was that right?
Yeah, the analogy.
Boxing, yeah.
Your analogy was perfect. One of the I can tell you guys, the majority of my clients that I serve are with me because they've been stuck in a location, or they've been stuck thinking about how can I get out from underneath this. I've been in the same cycle, in the same situation year after year after year. It's not getting any better. I'm not getting any progress. I'm tired of this. I want something different. And if I could sum up coaching in one word that I have found, it's accountability. It's I'm finding that people need accountability, and that helps with becoming uncornered.
Yeah.
But the majority of the time, people are stuck and they're cornered. And you're right, Lance. That is a fantastic way of doing it. And if you're in that situation right now, now's the time to reach out. Stop being stuck.
Well,
you can
it's
go
a
to my
bubble
website.
too.
You can go to my website and you can see my story. I'll be the first person to raise my hand to say I did stupid things with money.
Can I ask you something, Mark?
Yeah.
A lot of times when you're having a problem, like this is not working for me, I don't know what else to do, you're going to go to, for advice, your parents,
Yep.
your siblings,
Yep.
your friends, your mentors, your coworkers, your boss. But that's still, like I'm saying, with the bubble. And so you're saying, you bring accountability to the table, and most coaches do. But it's also just like with real estate, it's my knowledge of the industry and what's possible. It's your knowledge of, hey, you've gone to these 5 people and they've given you the best advice they can, but they don't know all the different things because you've talked to so many different clients. Hey, this worked over here. Gosh, this would work for you too. Yeah. This worked over here. This isn't going to work for you, but this one might. And you're getting out and there's nothing wrong with going to our parents, our siblings, our bosses, these other great people that we have in our life to get advice. But if it's not working, sometimes you need more knowledge, or you need that outsider
100%, Jennifer. This is really, really important because as a financial coach, as a career coach, someone talking about finances is not easy. It's personal. It can be it can reveal that people have shame and guilt, and it can also be very enlightening and exciting because they made the right decisions. They're just not sure where they want to go. Even the closest people, what I have found is that the people around you, sometimes that's the last person you want to go to talk to about finances, because it may not be a judge-free zone.
Right. Or you feel like they're going to be judging you different, even if they aren't.
Exactly. And it comes in the form of, I taught you better than this. Why? And it becomes a shame, and so sometimes people are reluctant to go to the closest people to talk to them about finances, because it can be very personal, and it could be something that they don't want to ruin their image with the closest people that are next to them. So
but what I'm saying too is, it's not just, hey, I taught you better and I don't want you to know I've screwed up. Sometimes it's that the person who taught you this, you're like, I don't know if I trust what you taught me, because this is the situation I'm in. It can be both.
Right.
And you still want to love and respect. If it's your parents who you learned your money management from, you still want to love and respect them, but you don't necessarily want to be going down the path that they went down.
Right. And by bringing in an outsider that can look at something so critical and tap into all of the experiences that I've gained, and I'm not ego driven, but all of the experiences that I've had can be used to get them out from where they're at. Number two, the second thing on this is, if a person hasn't gone through the things that you have gone through, they can only understand it up to a certain point.
Mm-hmm.
For me, you guys can visit my website. I had $323,501.21. It was my journey was 60
in debt, not in the bank.
In my journey was 63 months of $5,000 a month, and so none of this. I shared that with you because shortly into the journey, it did not become about the money being paid. It became a celebration of the behavior and the discoveries that I was learning about myself.
Yeah.
When you have a robust emergency fund, you can handle a broken down air conditioner. You can. One of the things that we should never do is stop saving. Even or preparing. Look forward into what the future. This is January of 2026. What are you? Where and for anyone listening, I'm just going to ask a simple question regarding your finances and your career. Where are you at 12/31/2026?
Yeah. Well, and I'll ask the same thing about the house. One of the things that I'm asking a lot of people this year is tell me something you love about your house. And if your answer is flat nothing, then hopefully we can get you into a house that you love or change something about your house so that you do love it.
Right. Yeah. And Lance, I'm glad that you brought that up about being cornered, because I said this, I think, on our last podcast. I don't believe that there is no hope.
Mm-hmm.
I'm guided by faith, and my faith guides me into believing that there's always hope. And you can even go to, that is an important part of my website, and how I look at and lay out hope. Hope is not a strategy. Action with hope, you have to put a call to action. And if you think that you're stuck and you've been in this position before, one of the reasons why we're here is because when someone leaves your office and there is no, and it's no, that is not an option in my book.
Mm-hmm.
I don't care if you start with paying $1 extra towards your debt.
Mm-hmm.
That's where if you got the shovel and the dirt below you is your debt, and you put the shovel in, and all you do is chip away a small little piece of dirt because the dirt is concrete hard.
Mm-hmm.
You've started.
Yes.
And I don't care how hard it's going to be. We're going to water it. We're going to break it up, and we're going to get this stuff out. And building wealth, when you're out of that, I just laid out yesterday for a couple how they, with just the money that they're using to pay off debt, if they just take that money and apply it towards their mortgage, their house is paid off in 7.5 years.
Yeah.
If people listening to this right now don't think that you can't pay off a house in 7 to 10 years, then you need to schedule a call with me and let me show you exactly how that can happen.
Yeah.
Schedule it with me too, and I'll show it to you too. I'll show you that. I've got Mark's got it too. Really cool spreadsheets that show it. The numbers don't lie.
Mm-hmm.
Maybe we should rename this New Beginnings 2026, because we've been talking about ways to deal things and stuff going on. I wanted to leave you with this, or my final comment of the day. I deal with all kinds of people. I deal with people in crises. I deal with people making a lateral move. I deal with people that so my loans closing this month. One was the HELOC story. It's closing next week. One was a longtime customer who called and said, "Hey, I've seen on the news things are going on. Should I take advantage of this? What would it take?" And it took us. We had to wait, Mark, 90 days until the sweet spot was there that met all their parameters, and we did it. On New Year's Eve was actually the day that New Year's Eve at 11:50 is when we pulled the proverbial trigger that it was exactly right. And then the last one is I'm looking at this borrower's mortgage statement. This is a loan where we're doing a Family Opportunity Act. Any of you remember what that is?
Mm-hmm.
So
is that when you can do a second FHA when you're living close to a family member?
It's a conventional loan that you can purchase a home for a parent that can't afford to be in a market, or a disabled child or something like that. And I often told people, I didn't know about this product for years. Not they would call and say, I want to buy a home for my parents. I'm like, you can't do that. That's an investment property. And
Mm-hmm.
after 2008, the investment property costs, the rates aren't that bad, but the cost to get that rate's insane. But
Mm-hmm.
you can do this just as if it's your primary home. Anyway, this borrower, my borrower, looking at their mortgage statement, I mean, they're very well to do. Their mortgage note is $27,000 a month. But they're also, they're paying $20,000 every 2 weeks towards principal. They can afford to do that. It's an instrument, and it's pretty interesting. Mark, I spoke with their financial people. They had asked some questions for me. They're going to have the sucker paid off in like 7 years.
Yeah.
They're just using it as a tool. There's wonderful interest there. Like I'm looking at the interest because it's their primary home. The interest per month is $19,900. Isn't that crazy? Amazing. They're using it as a tool and a vehicle, based on a large business they own as well. It's pretty cool.
Money is a tool. Money is a tool, and so I mean, for the average person, the average, I want to build wealth. I want to have a good retirement. If you just look at the amount of money that you're using to pay debt, let's take, for example, $3,000. Let's say, for example, you have $3,000 worth of debt that's going out every month. Do you know that that's $36,000 a year?
Mm-hmm.
What if for 1 year, if you pay off your debt? Now, I know this is going to be, counter to what was said earlier. Why do you need a HELOC? If you have no debt and you take and you're living your lifestyle, you're paying your debts right now, and you have your lifestyle, just to eliminate the debt and divert the same amount of money that you've been paying for debt into a high yield savings account for a year. Why do you need a HELOC? Why do you need a crutch or debt?
Right. If that's what we were saying for most business owners who don't have that yet. And so when you're running into low times, you don't want to have your business folding. You want something that you have not touched. But obviously the better way to do it is to have a reserve fund. But sometimes the reserve funds for businesses are pretty substantial.
Right. Like I said, for the average homeowner, the whole idea is just look at the debt. Anyone listening to this right now, look at how much money you're spending in debt, and take that money and say, if I didn't have this debt, how could I use this money to secure my future or secure the reason why I use debt? Mm-hmm. If you can use a credit card, then why can't you use your own cash and replenish your cash?
Mm-hmm. Yep.
And pay yourself.
The power of wealth comes when you don't send money, when you're not a slave to the lender. Mm-hmm. Now, I agree that not everyone can pay cash for a house, right?
Right.
That's just not realistic. So having no debt, having a means of being able to repair things and avoid debt gives you the opportunity to put money towards that house and build wealth. And in my mind, not having a mortgage is one of the most peaceful things that I've ever experienced. Now, that should, and I'm not trying to be counter to what you guys.
No, because you had a mortgage when you bought your house. We all understand that there's very few people who can buy a house without a mortgage. So when you're saying not having a mortgage is very peaceful, that doesn't negate buying a house. Doesn't negate using Lance to get the house to begin with. It's just like if this person does use one of these other options or a HELOC or something for temporarily, it's that temporary, and all things are rolling some dice, but usually you're not stuck in what you do today. You're usually not going to be stuck for life if you're living in America.
Right. You want the people that are on these screens right now in your corner, because we have for me, I'm not transactional. Mm-hmm. For me, I'm transformative. I
Yeah.
want people to. I want to transform where you're at. If it was transactional, then I shouldn't be coaching.
Mm-hmm.
It's that simple. I'm
Yeah.
not going to let you not have hope.
Yeah. Well, and that's, like a lot of people, their goals are out of debt, buy a house and all that. And so that's why I said, again, keys to home, we all work together. And it's not keys to house, it's keys to home, whether it's a home of one person or a home of 18 people. So I think we're going to probably wrap. I'm working on a special guest for next week that couldn't come at the end of last year. So we'll work on that. I think we're going to try and do every other week a guest. If you or people watching this have guest categories, suggestions, or specific people, let us know. So that's all.
Yeah, and like and share this video. One of the things that that I've tried for this year want to do is encourage people to share this message. You don't know what other people may be going through and how this may be a sign or a place for hope. It's or a place for someone to finally say, hey, I need help. Something's not working. Appreciate it's been a very spirited podcast. I think that's okay because that's normal.
Yeah.
That's normal.
Yeah.
Yeah.
So, all right. Until next,
Say again.
Until next week.
Yeah. We'll see you.
All right. Sounds good.
Stop recording.